Hello, my name is Nifty Nomi and welcome to my live action bookkeeping video. This is video number 2 in the Grand Gate Gardens case study, and this video covers April week 1. So that's April 1st to April 4th, 2025. Check out the link below to download the documents or to request a topic or to find out more about the case study project. Now, on to the bookkeeping. So I have the QuickBooks file open and ready to go. We did put in the March transactions last week, and we did a manual bank reconciliation. So if I were to go to transactions right now, you'll see it's ready to have the bank feed connected. And guess what, guys? This week we are going to start learning about the bank feed. All right, so I'm going to bring this over. And you can see this is April week number 1, and there's 3 folders. One is the bank feed download. So we're going to start downloading the bank feed each week now. And you'll see that there's the CSV ones and the QBO ones that if you were to connect the bank feed, what the QBO bank information would look like what the information would look like as it flows into QBO. CSV files are there if we wanted to play with different bookkeeping softwares, which I will be doing in upcoming weeks. Very excited. And if we open up this QBO files, you'll see I have 2 options. So the reason I have 2 options is to illustrate different things that might happen. Okay, I think I'm going to start off really quickly with what would happen if you were to download a bank feed. A lot of times we'll download a bank feed that is older than, say, 3 months. And online banking generally only remembers 3 months of transactions. So if you open a bank account in like November of last year, this is only going to go back to like sometime in January, February, March, April, like that. It only usually goes back 90 days. And if you're doing bookkeeping for the first time in a brand new file, what's going to happen is if you just try to download the bank feed and your GL account is currently at 0 for that bank, but there's an opening balance to the limited time it goes back to, QuickBooks puts in a spooky opening balance equity. And I want to show you what that looks like and how to fix it. So I'm going to bring this over and I'm going to say upload transactions. I can't connect it. It's a mock. It's a made up company. And I'm going to pull over the April 1st to 4th. And remember, this bank was opened March 25th. There's a bunch of transactions in there in March. And this bank feed is only going to go to April. There's an opening balance in this connection from the bank. And I'm going to illustrate what it would look like if we were to upload to a bank that had a 0 balance in the GL account where there should be entries. We've got entries already in that checking account. So I'm actually going to save the savings account. We haven't touched that one yet. So don't do this with yours. Connect it to the checking. But let me show you what this looks like. I'm going to hit continue. And now we have the tile. And you can see that it says in QuickBooks, the bank balance is $12,750. In the savings, there we put no transactions in. Why is this, right? And in fact, when we go to the reconciliation screen, and we go to, so we're in the Canada Bank savings here, you can see it's got a beginning balance of $12,750. And if we go to the history, there's no reconciliations in the savings yet. Like, why is there an opening balance in an account that we haven't reconciled yet? And that is because QuickBooks put in the opening balance equity to try and help us with our bank reconciliations. But the opening balance equity, we know that $12,750 is a combination of Sarah's deposit and the rent expense. Like, opening balance equity is a black box of unknowns. And so if you see that on the balance sheet, you have to figure out why it's there, what the transactions actually are, and actually you need to get rid of it. And I'm going to show you how to do that right now. So first of all, the quick way is you can just type it into the search box. So 12750.51, And there is that spooky deposit that QBO put in. And the other way to see it is if we go to reports and we go to the balance sheet. And you can see here that it's gone ahead and put in the balance. There's us, we did that manually last week, but it's gone and put in that opening balance here into the savings account just because I did that bank connection right now. And this is the opening balance equity that I'm talking about. Opening balance equity is such a black box of what is that number, right? And you think everything looks like it reconciles and fine, but you can see that no, we have to know exactly what the transactions are, like we did with the checking, and put them in properly. So I'm going to go ahead and take this opening balance equity GL account, look at the transactions. There's the transaction. I'll go right into it. And again, we could have gone into it from the search box. I was just showing you another way of doing it. And here is QuickBooks going ahead and putting in this quote unquote deposit. Of course, if it was a negative balance as the opening balance, it would be putting in an expense. All we need to do is go more, delete, just like that. And that is how you fix the opening balance equity. Of course, now you have to make sure that you know what the transactions are that comprise that opening balance equity. And if you've already reconciled the bank, there's more work to be done, and that's going to be covered probably in another video sometime. But for today, let's go back over to the transactions here and the bank transactions from the bank feed. And these are not QuickBooks entries right now. Okay, what these are is their bank feed info lines. That's what I call them. They're information coming in from the bank. And what I did just now is I accidentally, or on purposely accidentally, connected the bank feed info lines to the wrong GL account to show that opening balance equity. So what I'm going to do is I'm going to say, no, these are not the bank info lines that represent reality of the Canada Bank savings, and I'm going to exclude them. And again, I'm only excluding these transactions because they're bank feed info lines that I don't want to see in Canada Bank savings. They need to be in Canada Bank checking, and we'll talk about excluding later. I'm just going ahead and delete these excluded bank feed info lines. So now let's go ahead and upload the transactions. We're actually going to upload the transactions this time, March 25th to April 4th. So you don't have to do this if you're doing this yourself in the case study. Just do the 1st to the 4th. Just make sure they go to the right bank account. I'm going to do the 25th to the 4th just to illustrate another thing that might happen. We've manually reconciled March already. So what happens when the bank feed info lines come in for a period we've already reconciled? So let's go ahead and do that. If we are going to link an account directly to an existing bank, we would use link account. I have the download, so I'm going to go ahead and upload that download. I'm going to bring it on over. So that's, again, March 25th to April 4th. We're going to go continue, and I'm going to say it's the checking account. There it is. So the QBO downloads from the bank say what the bank account number is in there and everything like that, and the opening balance. That's what you saw just in our last example. And QuickBooks is just saying, hey, last time you uploaded this account, you would put it to savings. Are you sure this is actually checkings? And it is. So I'm going to say continue, and we're done. And then we can go on over to the Canada Bank checking tile. So here what we have is the bank feed info lines coming in from the bank. And again, bank feed info lines are not QuickBooks transactions. What we want to do is we want to have a transaction in QuickBooks marry a bank feed info line. We want them to get married. We want to connect them, and I refer to it as marriage because sometimes bank feed info lines get married to the wrong QuickBooks transaction. And I say that they are not soulmates when that happens and that they need to get divorced. But when a bank feed info line gets matched to or marries its QuickBooks transaction that it is supposed to be married to, I call them soulmates, and they get to stay together forever. So let's talk about this bank feed screen. There's something very, very important that I need you to know, okay? The first column here, that is information from the bank. You can trust it. This description, information from the bank. You can trust it. The payee, this is just QuickBooks guessing. I wish that it was noted somehow, like in a different color, to let you know, because a lot of times people will just trust what it says. And you can imagine if there was like an e-transfer to Bob last month and QuickBooks says, oh, the last time it was an e-transfer, it was to Bob, it's going to suggest Bob again to help save you time. But our brains see, oh, that's Bob, and we think that was an e-transfer to Bob, but it wasn't. So just be very aware that this column is just QuickBooks guessing. This column, the categorization, also QuickBooks guessing, right? Insurinators, that's not equipment lease, it's just QuickBooks guessing. And when we have a lot of transactions to work through, we can get click happy and our brains can trust it. Don't trust it, all right? It's QuickBooks making a guess. And same with the tax, right? So for example, we know there's no HST on the 20,000 received. We also know it's not sales. It's QuickBooks just guessing, but don't trust it. That's QuickBooks guessing in this column as well. Now, the last two columns, the spent and the received, that is the amount that is actually coming from the bank. You can trust that information. So while we're on the bank feed, I want to take a moment to discuss why QuickBooks Online is so powerful, but why it's actually so difficult to learn, even though it feels like it should be intuitive. It's because intuitively, there are two different ways or two different methods of bookkeeping. The first method is entry-based bookkeeping. So if you've used Sage before, or if you used QuickBooks Desktop before, these are examples of entry-based bookkeeping. So you get a source document, you see the information, and you manually enter that into the bookkeeping file. Then you do a manual bank reconciliation like we did last week. You just check off everything that you see go through the bank. Entry-based bookkeeping, very intuitive as you learn how to do bookkeeping. And it's great for accrual bookkeeping, right? Because you see a bill and you enter the bill, and then you see the bill pay, or you print the payment and you see the payment and you enter the payment. You're entering these things manually. It's also intuitive when it comes to invoicing clients. You send out an invoice. They pay it, you put in the payment, you mark it that it's paid and deposited it to the bank, and then you do your bank reconciliation. So none of that is with a bank feed. It's very intuitive. And the other methodology of bookkeeping is it's new with this whole era of internet and bank feeds is what I call transaction-based bookkeeping or feed-centric based bookkeeping. And an example of software that does this transaction-based bookkeeping is Wave. And so Wave is a software coming from Silicon Valley. There's a bunch of them where you download your bank statement, your bank feed or your credit card feed, and you can just say, oh, that's office supplies, back out HST. Oh, that's insurance, no HST. Oh, I went and got gas, back out HST. Oh, and you just sort of say what it is right from the bank feed. And when you do this, you lose seeing the documents and that accuracy that you would gain from visually seeing the documents. And you're also going to lose your accrual bookkeeping, right? So if you see a vendor get paid, you're like, oh, that's materials, back out HST. When really, maybe you are paying a bunch of bills from January, February, March, and you're paying them in April. So you're losing the accrual accuracy of bookkeeping. But the benefit of the bank feed centric transaction-based bookkeeping is that you're not making typos, right? Like you don't have to type the date, you don't have to type the amount, right? No typos, and your bank reconciliation goes super quick, and then you can set up rules and you say, oh, every time I go to Home Depot, just make that materials expense. Just set up all these rules and it starts doing it all for you. You got to be careful with a bit of over automation, and we'll talk about that a little later. But When it comes to a simple business, like think a solopreneur, a freelancer, maybe think of somebody who does design, or somebody who cleans houses, for example. These are very simple businesses. If it's just a single person, self-employed, cleaning a house, for example, they're not going to really carry a balance with vendors. If they go to Walmart and get cleaning supplies, there's no bill and bill payment. So accrual and cash bookkeeping, it's kind of like the same thing, because the incurred date is the pay date. And probably with their clients, the clients will pay them the day that they come, either with a credit card or an e-transfer or whatever. So even their sales, like there's no real lag in receivables. So you can see how actually transaction-based software for these very simple companies can actually be useful and helpful, but not so much for the not solopreneur businesses. So this, though, is why QuickBooks Online is so powerful, right? Because it's going to combine all of the strengths and accuracy and accrualness of entry-based bookkeeping from source documents, and it's going to combine that with the power of a bank feed that allows you to enter amounts quickly without typing and set up bank feeds and rules. And that is why it's so powerful, but why it's so difficult to learn, because we come in and think, oh, I just need to sort out the bank feed. In QuickBooks Online, you cannot do everything from the bank feed. That's takeaway number one, because it's combining the power of both. And that's why also it's a steep learning curve, because it's two ways of thinking about bookkeeping smushed together. So now that you know that, now you know why this bank feed is so powerful, but why it's also so perilous. For example, we've already put in the $20,000 from the shareholder, but if somebody was just clearing the bank feed without thinking, they're like, oh, $20,000, garden center sales, back at HST. Don't do that, right? So you can see how the bank feed, if you're not coming at it with the right approach, can actually get you into a lot of trouble. Okay, so having said all of that, we're going to dive into the actual bookkeeping now. Let's come over to the documents. And I'm going to back up to, we'll just do the one with notes. And I generally say do charges first and bills next. That's just how I roll. And we can see that the first one is commercial insurance. So I'm going to open this up. And here we go. We can see that it is a insurinator's sort of insurance policy. We can see that it's for commercial, it's not for auto. We can see it's not for her home, it's for the commercial property that she's leasing. So this is all very important information to know how to enter this in. Something that a lot of people get confused about is this RST, or it might say PST. PST, which is provincial sales tax, RST, which is retail sales tax. Neither of those go to the CRA. CRA only gets GST and HST. So when you see RST, it's actually not a GST, HST input tax credit. Okay, so in this case, we're in Ontario. RST is not going to CRA. We cannot claim this as GST or HST because it isn't. It's retail sales tax, or a type of provincial sales tax that goes to the Ontario government. So this is going to be exempt when we put the entry in. So I'm going to scroll down and we can see that there's actually a payment schedule here. And they're basically saying starting April 1st, you're going to get charged $102.15 a month. So this is an example of one of those transactions that I don't mind putting in from the bank feed moving forward, but we're going to do it the big screen way this month, and next month you'll see me enter it in from the bank feed. So let's pull this over and shrink this down. So if I were to enter this right from the bank feed, we could enter it in what I call the shortcut way. We don't have to do the big screen way. But I'm going to show you what it looks like when we do enter it the big screen way. So I'm going to say new. This is an expense right here. And it is insurinators. And it's being paid out of a Canada Bank checking, and the payment date is April 1st. And the category, this is commercial insurance. Remember, I mentioned how important it was to say what type of insurance is being paid. And then the amount is 120, nope, I got it over here, sorry, 102.15. And remember what I said before, RST is not GST or HST, doesn't go to CRA, so this is going to be exempt. Insurance generally is exempt, like this. And this is like a Nomi Best Practice. A Nomi Best Practice is for reoccurring payments, specifically for insurance, I like to attach the very first policy that incurs this reoccurring payment. So every time there's a change in amount, in my files, you can go to that very first change and see the policy update that changed it. And this is just a great way for me to also make available that insurance document to maybe an accountant, because they might want to know, well, what's the value of the property, or, you know, where is it? Like, what's the value of, like, sometimes if it's like an auto policy for a vehicle fleet, it lists all the vehicles. There's a lot of really great information in these insurance policies. So what we're going to do is we're going to pull over this, I just pulled it over from the window there, and I'm going to upload the insurance policy to this very first charge of this amount, and I'm going to go save and close. So when we enter in a transaction, what I call the big screen way, okay, then we can match it to the bank info line. So we just put in the QuickBooks transaction, the big screen way, and I'm just going to go to it. We can click on it here, or in the little spyglass, we can go to the last thing that we entered. And right now you can see that there's no blue at the top left here. No blue. And I'll show you what I mean by that in a moment. I'm going to come down to this bank feed, and I'm going to say, yes, this match that you found is correct. It's not always correct, so you want to check the date, and there might be a list. You might have to pick another one, but yes, this one is correct. I'm going to say match. Marry those together for me. So I'm going to go back to that expense that I put in the big screen way, and you're going to see now it is married to a bank feed info line. That is how the bank feed works. And when I matched it, by the way, to this bank feed info line, what's happened is it put a little blue check mark on the bank reconciliation for us, and it has marked it as cleared. So that's fabulous news. That's going to make our bank reconciliation go so much quicker when we go to do that. So let's see what is next in the charges folder. Let's see, we've got GoTellaCommunications. Here we go. Now, again, doesn't this feel like a bill, right? Feels like a bill because it's big, but I put it in the charge folder. And why did I put it in the charge folder? Because the bill date is the same as the paid date, and there's no check number to track. So this is what I would consider a charge, even though it looks like a bill. Notice too that Sarah noted that she charged it to her personal credit card. Now, we've already talked last week about how not using a dedicated business credit card is risky and can make bookkeeping take longer. So if she had not forwarded this to us, we wouldn't have even known that it happened, and we would have missed it. If she's doing her own bookkeeping, she might have forgotten about it and missed it. So definitely many benefits to having your automagical dedicated credit card and business account. But this case study is really trying to represent what happens in reality. And in reality, sometimes a business owner has no choice, or for whatever reason, they don't know about the magic hack, and so this is charged to her personal credit card. Another thing to note about this bill is that it is for internet for the business address, the address of the actual garden center on 465 Main Street. That's why I have that cheat sheet so I can see the different addresses, because sometimes business owners are going to supply you their personal bills for their personal home. And there are different methods for approaching the business use of home expenses, But generally, I would say personally that those should be more of a tax adjustment done at the end of the year and not tracked in the actual bookkeeping file for the business. But that's just my approach. There are other ways of doing it, and I can discuss them one day. I just don't want to complicate this case study too much. So right here, we're only going to be entering the business expenses, not the business use of home expenses. And Sarah has given us the internet bill for the actual business location. Excellent. So let's go ahead and put this in. So I'm going to say new expense. And this is GoTellaCommunications. And she's put on there charge to personal credit card. That's very helpful to know because it's not saying what credit card it was paid with. So again, if we didn't know that it was charged to personal, we would have to stop and we'd have to go check the bank feed or maybe the bank statement or hold on to it or put it like it's just much easier to know how things were paid. So we're going to go ahead and say that it was paid by the owner's CC or bank. And the category is internet. And then the amount, I'm going to move this over, was, we can see it's exclusive, so we'll put the pre-tax amount in of $55. Exclusive 55 plus tax, $62.15, everything's happy. We're going to go save and close like this. Excellent. Now, what is next in the case study documents? And that is the Home Depot receipt. So let's take a look. So having a look at this Home Depot receipt, you can see that it was paid by debit 5642. So that was a debit from the bank. Excellent. And if you're not quite sure what the description is, you can actually just go to Home Depot and put in this item number and it'll take you to what the actual thing that was purchased. You can do that with Canadian Tire too. So that's super helpful. So Viagrow is a soil additive for growing things. Oh, a reason I have the Home Depot in here is because Home Depot is one of those businesses that go day, month, year. So this is a real good plug for why you actually want to, if you're going to file your paperwork and put it in later, go ahead and file your paperwork by month because you never know what order that date is going to be in. So this is going to be also a conversation we have when we use Dext, for example, to read the paperwork and sort of put it in for us. So I have that ready to go for when I do that review as well. So let's go ahead and move this over. And it's a charge. So we're going to go new expense, Home Depot. And this was actually paid by the Canada Bank checking, and the date was April 3rd. And then the category was purchases and materials, and I put it towards cost of goods sold because she's growing stuff. So this is part of making the flowers she's going to grow. And exclusive of tax is 75.63 with HST on there. HST on there, and we can see 85.46. Excellent. Save and close. So that is it for charges. So I'm going to go back and we're going to go to the bills, take a look, and we have one. It is Oodo. So let's open this up and take a look. So a few things to note about this Oodo. She notes that she's paid it May 2nd with her personal bank. And why then did I put this in the bill folder when really we're not reconciling the owner's bank or credit card? This could have just gone in as a charge. And I'll tell you why I'm putting this in as a bill. Because the paid date is different than the bill date. And if Sarah were to like print out her personal bank and circle everything that was business, and I had to make sure that I had it all in, I would see this 106.22 charge in the entry against the personal credit card or bank GL account on May 2nd. And that just makes it easier for me to make sure I do have everything in. Because again, when people mix the business bank and the personal bank with the business transactions and the personal transactions, it gets really messy, makes it very hard to do the bookkeeping. So for me, I like to actually represent reality so that troubleshooting and checking is just a little bit easier. So that's why I'm putting this in as a bill. And something else that's really interesting about this one is we need to make sure that we look at it instead of just blindly assuming that everything that Sarah gives us is business related, because she is trying her best, but she's very busy and she's trying to give us everything. And you can see here that not only is it her cell phone, it's her wife's, Jane's, as well, cell phone that's on this bill. Now, in the future, Jane is going to be part of the business, but right now, Jane is not part of the business, and so we're not going to be claiming her cell phone expense. Cell phone expense actually is one of those squishy mixed use expenses. That is, Sarah's going to be using the cell phone for both her business phone calls and her personal phone calls. So technically, and this is important, technically, we would need to prorate the use of her cell phone, the percentage that she's using it for business. But you'll talk to that business owner and they'll say, oh, I use it for over 90% business, just claim the whole thing. So what you want to do is you want to speak to the accountant or the tax preparer and just confirm, like as a team between Sarah and the tax preparer and the bookkeeper, we all need to confirm what we're going to do with these squishy mixed use expenses. So I spoke to the accountant, quote unquote, I spoke to him or her, them, I spoke to them. And they said, you know what? There's no other telephone right now on the site of Grand Gate Gardens. This is the only telephone right now. So until Sarah maybe gets employees and needs to make sure there's a phone line installed there or gets a business cell phone just for the business, the accountant has told us in this case, this is going to be used 90% for business. Therefore, put it in at just 100%. And that is what our discussion with the fictitious accountant is for the purposes of this case study, because it's already going to be a little complicated here because we got to back out Jane because Jane is not part of the business right now and that we cannot claim that as a business expense. Absolutely. So let's go ahead and put this bill in. So I'm back up to the top. And I can see that the bill date is April 4th. So let's go ahead and say new bill. And we're going to say the supplier is Oodo. And the bill date is April 4th. And the bill number, we could leave it blank. There's no bill number for this bill, but I'm just going to say April 4th. That's a Naomi thing. And the category is cell phone. And let's go down here to the details, and we can see that the business portion is 7232 inclusive. So we could add 64 and 24, but I'm just going to say inclusive and say that the amount is 7232 altogether. And we'll see down here that it's put that 832 in for us. Excellent. And now let's just go ahead and put this to owner's draw or contributions. It's kind of like an in and out because the owner's bank or credit card is also going to be moved at the end of the year to owner's draw contributions. So it's a little redundant. But again, when she circles that 106.22 needs to be entered in on her bank statement, this is just sort of like helping with the troubleshooting and tying everything together. So that's just the approach that I'm using with this case study. And so we're going to say 3390. Now you don't claim HST on owner's draw contributions ever. Even it says HST here, that's only counts, HST credits only counts if it's business related. Okay, so we cannot claim HST there. We have to put the amount after HST. It's all owner's draw contributions. And I'm just going to hit save. And when I just hit save, you'll notice make payment arrives. And we talked about this last time. I'm going to go ahead and make payment. And it's Oodo. Let's make this a little bigger. There's more my style. We got Oodo, and it's actually paid by the owner's CC or bank. And let's get rid of that. And we could just say bank here, or we could say it down in the memo. Bank, as I mentioned last time, I like to say what the last four are of the credit card, but we can just say bank right, the personal bank right here. And that the pay date is May 5th, I believe it was. May 2nd. So we're going to go ahead and say that this was paid May 2nd. So that again, when we're if she was to say, make sure you have this in, we've got a list and we can check, and we'll go save and close. So you can see that that's it for our bills. No more bills. And because this is not a week that covers the last day of the month, there's no bank reconciliations. But what we like to do is we like to clear the bank as we go, because we know that we've just entered stuff, and let's just make sure I didn't enter something with a penny off and then we can't find it or something along those lines. In fact, let's have a look at what that might look like. I'm going to open this up. Now, before I hit match, I want to discuss what might happen if we actually accidentally had set the wrong payment account for this entry. So let's go ahead and open up this expense. So I'm just going to open this up and say that we actually just sort of left it at Owner's Bank or CC. Maybe that's the last thing we entered or the last time she was at Home Depot and we just forgot to change that payment account. So what would it look like if we said actually paid by owner's credit card, and we scroll down and you can see it no longer can see it. This bank info line can no longer find its soulmate. So a lot of times a new bookkeeper might just like you enter your paperwork like in one frame of mind, maybe at a different time. And now we're in the bank feed. We're in a different frame of mind. So here's where this bank feed complexity comes in. And the new bookkeeper might think, oh, well, this is a transaction that is NR. So in the industry, NR is no receipt or needs receipt. So we're like, oh, like here's a transaction that the business owner didn't supply the receipt for. We'll just have to go ahead and put this in as small tools and equipment or whatever we guess that it is. And then we'll just mark it as NR so that we know we can go and let the business owner know, oh, you've missed this receipt. Just so you know, it's a bit of a risk to not have all of the receipts. And it's important to try and just take a look to see, did we enter it and just make a penny typo? Like a penny typo is another reason that the bank feed's not going to see it. So one way to check to see if it's a penny typo is just to say, find a match for me. And so we ask it to find, it can't find anything. The reason it's not offering up the receipt as a suggestion is because right now it's looking for all the unpaid bills and all of the things that were paid by the bank, the Canada Bank checking. And right now there's no unpaid bills and there's nothing in there paid by Canada Bank checking that could be this 8546. So at this point, a new bookkeeper or maybe a bookkeeper just trying to go quickly might say, oh, I don't have it in, right? And they'll go ahead and they'll enter this receipt from the bank feed and they'll move on. And the problem with that is when the bookkeeper goes to reconcile the bank, there's not going to be anything amiss. It'll reconcile fine because we have this Home Depot receipt in already as paid by the owner's bank. And if the owner never used their bank, we wouldn't have that GL account and we wouldn't accidentally have an expense in twice because we don't reconcile the owner's bank, right? And because we don't reconcile the owner's bank, there's no way of knowing if we have double entered in any of the expenses. And so again, just another reason to never, ever, not even start, not even for a bit, if you can avoid it, use the business owner to use their own bank or their own credit card, because it just adds more risk to the accuracy of the bookkeeping file. Okay, so what's another way then that we can try and look around to see if we've entered this already? A lot of times we're like, I swear I entered this. Well, of course we just did, right? So one way then is to go to the suppliers and go to Home Depot and just see if there's anything there either on March 3rd or April 4th, because Home Depot has a funky date, and we'll say Home Depot. Maybe they started in Quebec, because in Quebec, the French way of saying is 13e d'avril or something. So it's like, that's why it goes in a different order, I think. Anyway, so here it is. We can find it and it's the right amount, but oh, look, it's paid by the owner's credit card. No, it's not. It's paid by Canada Bank checking. So there we go. Going to go save and close. And now when we go back to the bank feed, we will see it there ready for us to match and marry. So there it is, ready to match the bank feed info line to the QuickBooks transaction entry and marry them together. So there we go. So we've gone ahead, we've put in all of the source documents supplied for the week, and we've also cleared the bank feed from April 1st to April 4th. But still got something else to do. We still got some housekeeping to do here. What happened is we have reconciled March's bank. Another way that the bank feed info lines cannot find their soulmate QuickBooks transaction entry is if that transaction entry is marked as reconciled, okay? Cleared or reconciled, but in this case, it's marked as cleared and reconciled. It's marked as reconciled. And because that 20,000 deposit that we put in last week is marked as reconciled because we did a manual bank reconciliation without the bank feed, okay? QuickBooks' bank feed can't see it. It's only looking for things that are correct to the penny, paid by the bank, and haven't already been cleared or reconciled. So that bit of information is going to help us when we troubleshoot some deleted reconciled entries down the line, but we're not going to do that one today. Today, what we're going to do is we're going to talk about excluding. So we can actually get rid of these off of this, what I call landing pad of bank info lines. I'm selecting them all, and this little thing pops up that says exclude. We could have just selected them individually, and that would pop up the option. And see how I can exclude them all? Exclude is used when we don't want the bank info lines there. And the three scenarios that I can think of that we don't want those bank feed info lines there is if we've already reconciled that period, we don't need them, or if we've uploaded to the wrong bank GL account, which is what happened when we did the savings, or I have seen bank feeds have hiccups. I really have, TD, looking at you. I've seen things sometimes go awry because it's a whole complex business banking online system, whatever. It does make mistakes. I think I've seen credit cards too do some weird, funky things sometimes. So you don't want to exclude transactions that are simply not business because let's say that, oh, this 6,000 was her personal rent, it's not business, and you exclude it. Well, when you go to reconcile the bank, it won't be there and your bank won't reconcile. Like 1 + 2 = 3. 1 + nothing doesn't equal 3. So you need to have the transactions in whether they're business or not. You just have to specify in the entry, this is not business. So again, that's just something I've seen. I've noticed some business owners just exclude it, not to do with business. That's not what this is for. So I'm going to go ahead and exclude these, and we can find them over here on the excluded screen. I'm not going to delete them this time. I'm going to leave them there. And the reason that I'm not deleting them is because they actually do represent transactions that have happened. I just did them manually on that March bank reconciliation. And so these are actual things that did happen in the bank, so I don't mind leaving them there. That'll be helpful maybe for troubleshooting another day. So I think that actually is April 1st to 4th in. I'm glad there was only a few transactions because we did cover some extra information today about the introduction of the bank feed and what to do with that opening balance equity line, and even discussed what happened when you put in a receipt paid by the wrong bank account. So we did get to cover some introductory stuff today. So Grand Gate Gardens, video number 2, April 1st to 4th. We've got it all in. I hope you found this information helpful in the building, growth, and success of the business that you are working in and on. If you found this video useful, don't forget to subscribe to my channel. I'm also on Instagram at BeThatBusiness, and I'm at Nifty Nomi on Twitch and TikTok. And you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. I love making business make sense. The video today was recorded in beautiful Newcastle, Ontario. Thanks so much for watching, and get out there and be that business that thrives.